Hello everyone, welcome to this live session regarding general awareness, special focus program for RBI Grade B. So how is the preparation going on for RBI Grade B examination, which is going to be held on August 16th, 2018? Yes, so we have 80 questions on general awareness regarding the phase 1 of RBI Grade B examination. Yes, so how is the preparation? Do you have any doubts? So let's focus on only general awareness in this session because we have 80 questions. 80 questions means, suppose if you score more than 50, you can score 10 in each section and you can easily clear the cutoff, right? Generally it will be around 80 to 90, right? So minimum you have to aim for 50 plus marks in the general awareness section of RBI Grade B phase 1 examination. So what to prepare, how to prepare for general awareness? Most of you have this confusion. General awareness is an ocean, right? So most of you have a fear that general awareness, I can't clear this, and most of the people who excel in maths, reasoning and English, they fail in general awareness. So minimum cutoff we have to clear, right? So our aim is to clear the overall cutoff as well as the sectional cutoff also, right? So how to prepare for this general awareness? So what are the important topics? Let me discuss in this a general awareness special focus program for RBI Grade B. Nowadays we have the Bank of Baroda examination also, so it will be also useful for the Bank of Baroda examination, which is going to be held on July 28th, 2018. So shall we start? Yes, hope you can see my screen. Yes, the general awareness section. Which are the topics we need to cover? We have 80 questions and the 80 marks, and we have 0.25 is the negative marking. What are the important topics? First, we need focus area is the static banking general awareness. What is the static banking general awareness? First, we need to have a general idea about what is actually general awareness related to banking. First, we need to know what is a bank, right? What is a bank actually? Bank is an economic unit. Generally, bank is a storage unit, right? We may have a blood bank, we may have an eye bank. So it stores eyes, it may store blood. But here we are referring to economic or financial bank, which takes deposits and stores money and lends to the people who wants them, right? So what is an economic bank? What are the types of banks in India? And we have to go through the banking history in India. Which was the first bank in India? Bank of Hindustan, established in 1770s, right? At Kolkata by the private players. So banking history of India, what was the earlier name of SBI? Okay, it was actually three presidency banks were merged in 1921 as the Imperial Bank of India, right? So it was renamed as SBI in the year of 1955. So you need to know all these things. Bank of Rajasthan was merged with ICICI Bank. Sangli Bank was merged with ICICI Bank, right? Times Bank was merged with HDFC. You need to have a general idea about the banking history in India, right? So next, coming up to the how the interest rate is calculated on various deposits. And first, what is a deposit? What are the types of deposits? What are the general types of deposits? We have the demand deposits and the current account deposits. Under current account and under demand deposits we have savings, we don't have no interest is provided. Generally no interest is provided on current account, right? So these general terms related to banking, we need to have an idea about them. So time or term deposits, we have FD and RD, right? You have a fixed amount you want to save for some time, it is fixed deposit. No, you don't have a large amount, you want to save at regular intervals, that is recurring deposit, right? So both the current account and savings account is called as CASA, right? If you join both FD and RD, it is called as a flexi deposit. So these are the basics we need to have an idea regarding the deposits. Next, coming up to the interest calculation. How interest is calculated? So interest is nowadays calculated on daily basis. Right, interest is calculated on daily basis, and you need to maintain minimum monthly average balance in the account. Right? Currently, who fixes the interest limit? RBI fixes overall interest limit within the limit set by RBI. Banks fix their own interest. Like SBI is offering only 3.5%. Kotak Mahindra wants to offer 6%, right? So within the limit set by RBI, banks fix their own limit. Now some banks are giving the interest on a quarterly basis. Some banks are giving on half yearly basis. Okay, the interest back to the deposits. Because why they are called demand deposit? Because the customers demand their money whenever needed. So whenever the customers demand, the bank has to pay back the savings amount or the current account. Generally, interest is not provided on current account, and you also have the overdraft facility on current account. So this is generally related about the banking sector. Next, you have to focus on our RBI. What is this RBI? Who is this RBI? RBI is our central bank in India, right? It was established in 1935 through RBI Act of 1934, right? And which committee has recommended it? Hilton Young Commission. The first headquarters was at Kolkata when it was established in 1935, and it was shifted to permanent headquarters in Mumbai in the year 1937. So 2 years it has continued as the headquarters for RBI. So regarding RBI, what is the organizational structure? It has a governor and 4 deputy governors. How much term they serve? Who are the 4 deputy governors? Okay, how many regional offices it has? What are the subsidiaries of RBI? Subsidiaries like NHB, DICGC, okay, and Bharatiya Reserve Bank, Node Mudran Private Limited. And what are the other subsidiaries? National Institute of Banking Management, Institute and Development Research in Banking Technology. Okay, so all these are important regarding RBI. And what are the functions of RBI? What are the functions of RBI? What does RBI does? RBI functions as banker's bank, right? Because it is head of all banks in India. Whether the foreign bank is functioning as a branch in India, it is also the head of that branch also. So it is the head of all banks in India, because if it is not the head, suppose whenever the banks closes its shutters and runs away, so where does the depositors go? So in this case, the RBI will assure, I am the banker's bank, I am the head of the banker's bank, you can approach me. That's why DICGC does some insurance facility, right? Maximum you can insure for 1 lakh rupees. So it issues monetary policy, it comes up with monetary policy, right? Yes or no? It comes up with, it regulates foreign exchange management. 4 currencies it maintains. What are those 4 currencies? US dollar, Japanese yen, euro, and pound sterling. These 4 currencies we can exchange with RBI. These are the 4 currencies actually maintained as foreign currency assets. Okay, and it issues currency, generally more than 1 rupee note. All the notes are issued by RBI. All the coins and 1 rupee note is issued by Finance Ministry, right? And it is a regulator of NPAs and KYC norms. NPAs means non-performing assets and know your customer norms. Next, it regulates and it is called as the lender of last resort. Why it is called as lender of last resort? This is the most important function. Just a minute. Yes, these are the functions of RBI. Moving on to the next topic called monetary policy. What is monetary policy? I think you can see my screen now. Yes. What is actually monetary policy? To regulate inflation or deflation. So simply said, we can say to maintain a price stability, the monetary policy is used. So now we will be discussing the topic called monetary policy. So what is this monetary policy? So monetary policy generally is regarding to maintain monetary price stability. Very high prices are not favorable to whom? To consumers. Very low prices are not favorable to whom? The manufacturers or producers, right? So very high prices, very low prices are not favorable. So price stability must be maintained so that the manufacturers as well as the consumers are at happiness, right? So manufacturers should not be feeling bad or consumers should not be feeling bad. Manufacturers should have interest to produce and consumers can afford to buy that product. Okay? So for price stability, the RBI comes up with a monetary policy. So RBI issues bi-monthly monetary policy. That means for every 2 months it comes up with monetary policy, right? So why I need this monetary policy? To control the prices. What do you mean by inflation? Inflation means high prices. Yes. So high prices means how high prices are created? That means the demand is more. Whenever people have more money, they'll spend more, right? When they spend more, the demand rises. So when the demand rises, the prices will also rise. So when the prices rises, it is not favorable to all the consumers, because in the society most of the people are middle class, right? Not the richer class, but it is middle class. So they must be affording to buy these products. So it will go for contractionary monetary policy. Or controlling the money supply in the market. So when I stop the money supply in the society, the prices will be coming down. When people doesn't have more money, they'll spend less and the inflation will be controlled. So what happens during deflation? There are very low prices. So manufacturers must be interested to produce that. So it will go for expansionary monetary policy. Understood, everyone? So it will add money to the society, add more money to the clear? So during inflation it will follow contractionary monetary policy, during deflation it will follow expansionary monetary policy. Then what are the tools of monetary policy actually? The tools of monetary policy are generally two types. Okay, one is quantitative tools and the next is qualitative tools. So what are the quantitative means? They are actually dealing with the numbers. As the name says, they deal with the numbers. What are those? Repo rate. Please be active and reply in the comment section if you have any doubts. Reverse repo rate. These are quantitative in nature. CRR, SLR. Okay. Qualitative means it has a credit rationing or credit ceiling. Right? Moral suasion, margin requirements. Shall I explain all these or shall I move to the next topic? What do you say? Shall I explain all these or shall I move to another topic? Yes, please comment in the comment box. Yes, open market operations. Yes, everyone will go with the majority because majority will form the government, right? Numbers are very important. Recently I have seen in the parliament also. Yes, shall I explain? So shall we move on to the first one? What is repo rate? What is reverse repo rate? I'll start with the repo rate first. I am explaining most of the banking topics, so be alert. What is this repo rate? Repo rate is other name for repurchase rate. At this rate of interest, RBI lends to the banks in India. Suppose currently the repo rate is 6.25%. So at this rate of interest, RBI will lend the money to the banks in India, particularly commercial banks, taking back their government securities. What do you mean by government securities? Generally, whenever we take money as a loan, we keep something as surety, as collateral, right? So that is called a government security. So simply said, the banks will borrow money from RBI at repo rate of interest. Okay? Clear with this? Giving back the government securities to RBI. Okay? Next is reverse repo rate, the opposite of it. What is the opposite of it? RBI will take away the money from banks, giving back the government securities. Currently it is 6%. Yes? Where is my slide? Just a minute. Yes, so this is the reverse repo rate and repo rate. And moving on to CRR. Next is CRR. As the name says, cash reserve ratio. What is cash reserve ratio? Some percentage of NDTL must be kept. What do you mean by NDTL? NDTL means demand deposits plus time or term deposits. The FD and RD is called as time or term deposits. So that must be kept with RBI as cash only by the banks, because whenever any emergency purposes, because always this CRR must be maintained by the banks in India. Currently it is 4%. Suppose if one bank has 100 crores as total NDTL, that is total deposits, 4 crores must be kept as cash with RBI only. Okay, next is SLR, statutory liquidity ratio. So same thing here, but as cash, gold, and as government securities. Some percentage of total NDTL must be kept as cash, gold and government securities within the bank itself. Is SLR. Currently it is 19.5% is SLR. Okay, clear with this? So clear about all these things? Yes. Next. So now we shall see what happens during extreme inflation. What do you mean by extreme inflation? There is the prices are very high. So now let's play a game. Let's see who will win, you or me. So what happens to repo rate, reverse repo rate? I want all of you active participation. And the last one is open market operations. Open market operations means the buying or selling of securities, so that the money supply will be regulated in the market. You have to tell me what happens to during extreme inflation, whether the repo rate will rise or decrease. You have to tell me. So tell me, the first one is a repo rate. What happens to repo rate, whether it will decrease or increase? Can anyone tell me? What is repo rate actually? At this rate of interest, RBI will lend to the banks. Currently it is 6.25%, right? So whether it will increase or decrease, what happens? The repo rate during inflation. What do you mean by inflation? Where there are high prices. So RBI has to enter into the market through its monetary policy, and it has to control, it has to go for contractionary monetary policy, right? So during inflation it will go for contractionary monetary policy. Yes, it has to stop the money supply or to take away the money from the market. So it will obviously increase. Why it will increase? Because when I increase the repo rate, suppose a bank is offering 10% as a loan. 10% interest on one loan. Suppose on 1 lakh it is offering 10%. Another bank is offering 13%, 13%, 10%, 13%. So where you will go and apply loan? You will apply for 10% because it is charging less interest. Now RBI is offering higher interest on repo rate. There is no option, they have to take loan. So they will take lesser money, so that the banks will lend less. When the banks lend less, people will have lesser money and they will spend less and the prices will come down. So repo rate will increase. Now tell me what happens to reverse repo rate. Whether it will increase or decrease. Who is going to answer this first? Yes. Reverse repo rate, you know that, right? At the reverse repo rate of interest, RBI will take away the money from banks. Don't say banks will give to RBI, because RBI is already banker's bank. It will only print the notes. So don't say banks will give to RBI. RBI will take away the money from banks is the right terminology. So what is the right answer here? Reverse repo rate, will it increase or decrease? Yes. I just see just decrease, some say decrease, some say increase. Yes, the right answer is increase is the right answer. It will also increase. What is reverse repo rate? RBI will take away the money from banks or not? So simple example we will see. What is a simple example? SBI is offering 3.5% on savings account. Kotak Mahindra is offering 6%. Where you will go and dump your money? In SBI or Kotak Mahindra? Yes, in Kotak Mahindra only, because you will get more interest, right? So my aim is I have to take away more money from the banks because they are lending more. So if I take away more money from the banks and keep it with me, that is RBI, so they will lend less to the public and the prices will be controlled. Okay, so repo rate is like loan and reverse repo rate is like deposit. Understood everyone? Yes, so both of them will increase during extreme inflation. Yes, next, what happens to CRR? Cash reserve ratio. I've already told you some part of the total NDTL they must keep as cash with RBI. All the banks, they have to keep as cash with RBI, right? Yes, cash reserve ratio. Yes, most of you go with increase, some say no idea, some say decrease, because two of them has increased, so this should also increase. Two of them have increased, so this should decrease. Yes, the right answer is CRR will also increase. What is CRR? Banks have to keep some part of their money with RBI. So if I keep more CRR, they will keep more money with RBI and they will lend less to the public and people will not spend more and the prices will come down. Understood everyone? My intention is when these people spend more less, the prices will come down. Clear now? And then what happens to SLR? What happens to SLR? Yes. SLR will also increase. Because all of them have increased, this will decrease? No. You have to learn the concept and say SLR will also increase. Okay, these are the extreme conditions when the extreme inflation goes on. Generally only RBI will increase repo rate. Because if it increases all the rates, the total economy will fall down. That is a problem. So that's why it will slowly increase repo rate like that. Okay, but this is the extreme inflation case. Why SLR will increase? Because some part of their NDTL they have to keep it aside as cash, gold and government security. So that money will not be used for lending purposes. So if I keep more SLR, they will keep more money aside within themselves. Okay, that's why SLR will also increase. Then what happens to open market operations? What do you mean by open market operations? Buying or selling of securities, right? So whether it will sell or buy. What do you mean by selling? That means I am giving some product to you, I am taking money from you. What do you mean by buying? I am taking product from you and giving money to you. What is my aim? During inflation, I have to control the prices. So I have to take away more money from you, whether I have to buy government securities or sell government securities. Yes, the right answer is it will sell government securities. Understood, everyone? When I sell, I am taking away the bond and I am giving away the bond paper and taking away the money. That means I am borrowing the money from you, saying that I will give back the money with interest after some days. So the reverse happens during during extreme deflation, means what? Very low prices. So all will decrease because I have to add money to the market. Okay, and during this OMO operations it will go for buying the government securities. Clear with this? Okay, clear everyone? So during extreme inflation it will increase. So shortcut is all will increase. If I say directly you will not get anything. So concepts are very important. So this is about monetary policy. During inflation it will go for contractionary monetary policy. During deflation it will go for expansionary monetary policy. So now we shall see the next topic called what is actually inflation. Okay, hope it is clear for you. Somebody wants me to use black color. Okay, I'll use it. Well, what is actually inflation? What is inflation? It is generally people say some definitions. So it is sustained increase in prices or so inflation topic is very important for RBI grade B because they may ask you what are the actual topics which are covered in inflation. So sustained increase in price so how can you say there is increase in price? You have to compare with some base year. Some year you have to compare. Suppose this year the prices are high. So how you are saying high? You are comparing with some year, right? So there is a concept called base year. Compared for prices, and how this base year is chosen? The base year is chosen from first to last month in that year the prices are constant. Suppose if I take a base year called 2011 to 12. 11 to 12 means it is a financial year starting from 1st April 2011 to ending on 31st March 2012. Okay. So base year means the year which is compared for prices with the current year. So current year means, you know it, right? Current year I want the prices whether they have increased or not. I am comparing with base year. So what is the inflation? It is expressed in percentage, right? Current year prices minus base year prices by base year prices into 100, then I will get the percentage. Okay, so this is actually inflation calculation done. Okay, so there are types of inflation actually. What are the types of inflation generally? Some people say demand pull inflation, cost push, and there is one more category, structural inflation. It is also a type of cost push. What do you mean by demand pull? As demand rises, it will cause inflation. That means prices will rise. Suppose the demand for a product, a mobile, has increased, so prices of it will obviously increase. There may be many causes for it. Okay, suppose supply will fall, demand may also rise. That is also a reason for demand increasing. Next, what is cost push inflation? So as manufacturing cost increases, prices will rise. Suppose to make that product, the manufacturing cost has risen, the prices may rise. Suppose the workers in the company has gone on strike for bonus. So if the company has increased the bonus, the manufacturing cost has increased. So prices may rise now, right? So this is called cost push inflation. So next is structural inflation. Due to structural changes in the economy, the prices will rise. Suppose there is a drought. There is no rainfall in that year. So the supply may be less and the prices may be rising, right? Suppose there is emergency in the country, the prices may be rising. So due to structural changes in the economy, the prices will rise. So these are the three types of inflation generally we see. And there are stages of inflation generally: creeping, walking, running, galloping, or hyperinflation. So what do you mean by this? If the inflation per year is suppose less than 5%, it is creeping inflation. If it is 5 to 10%, it is walking inflation. If it is 10 to 20%, it is running inflation. If it is more than 20%, it is called galloping or hyperinflation. 20% means the price rise may be 120%, right? Clear with this? So these are the various stages of inflation. Clear? Next. So generally we have a curve called Phillips Curve. What is this Phillips Curve? It gives the relationship between inflation and unemployment, whether they are directly proportional or indirectly proportional. You have to tell me whether they are directly proportional or indirectly proportional. Yes? Yes, inflation is, what do you mean by inflation? High prices. Unemployment means you are not employed, you don't have money. When you don't have money, will you increase the prices? No. When you are employed, you will increase the prices. So that means inflation is directly proportional to employment and inversely proportional to unemployment. This is the Phillips curve generally we plot between inflation and unemployment. So higher the employment, higher is the inflation. Higher the unemployment, lesser is the inflation. Clear with this? So when you have money only, you will go and spend and increase the prices. So employment results in inflation, unemployment results in deflation. Okay? Clear everyone? So now we have different types of indices used to calculate inflation. Generally we see WPI, or wholesale inflation, and the next is CPI, that is cost price index or retail inflation. So generally it is, you are checking the price rise on wholesale goods. Wholesale mode means bulk traded goods. This is on retail goods, right? So wholesale goods and retail goods. So now currently the base year is 2011-12. That means it is a financial year. I am taking it as base year. So base year is treated as 100. So for this, the base year is 2012 equal to 100. That means it is a calendar year from Jan to December, and it is calculated by in India by Office of the Economic Advisor in Department of Industrial Policy and Promotion under Ministry of Commerce and Industry. Suresh Prabhu is the current minister, and here it is calculated by CPI Rural Urban Mixed is calculated by Central Statistics Office under the Ministry of Statistics and Program Implementation. Okay. In wholesale goods is calculated on, remember, 697 items. 697 items. There is no particular number for CPI. Okay. And the highest weightage is for, we have three types of articles: primary articles, fuel, power, light, and manufactured goods. The highest weightage is given for manufactured goods. Okay, clear with this? Yes. So highest weightage is given for manufactured goods. So this is about, in US we have a PPI, Producers Price Index. It is not used in India. In India we use it. Currently I think you have to note down the, you have to take the tabular column for from Jan, you note down till June, as well as because we have exam in July. Note down these values. Currently it is 5.77%. okay, this is 5%. Earlier it was 4.43%. okay, this was 4.87%. like that you have to note down for May, all those. Clear everyone? Yes. So this is about inflation. Okay, so these are some of the topics, important topics. Still inflation we have covered. The next session will cover some more topics for the RBI Grade B examination, and please practice the previous year question papers of RBI Grade B and other banking examinations. So practice is the only key for this examination or all the competitive examinations. And remember, 80 questions means you can easily score in the general awareness section if you are perfect in the general awareness. We want just the qualifying mark. So be thorough with the current affairs. Most of the current affairs will be related with the static general awareness for the banking examination. So all the best from my side. I'll be meeting you in the next session. Thank you so much. Hope you have enjoyed the session, and please let me know whether you have enjoyed or not, right? And if you want more sessions, please comment in the comment box, and you can take up the free coaching on talentsprint.com/exam-prep. Okay, I'll meet you in the next session. Thank you so much for joining. Take very good care of yourselves. Bye.